Well, welcome back. We want to take a look at oil prices this morning at 47.17, up this morning a fraction. Prices are on track for a third straight weekly decline, though. Joining us right now, OPIS chief oil analyst Tom Kloza. Tom, good to see you. Thanks for joining us.
Nice to be here.
You say it is conceivable that we could see crude oil down to $30, in the $30 range.
Yeah.
In the next few years?
In the next few years. I wouldn't say this year. I'd say right now crude oil is fairly valued. But it's fairly valued and inventories are dropping 40, 50 million barrels with a lot of financial support for crude. So when you get into 2018 and the OPEC accord ends, you get into 2019 and you have some big projects coming on, throw in maybe a slowdown or a recession, sure, you could see some moments where it's in the 30s.
Especially with all the supply.
Absolutely. And, you know, the mantra that was lower for longer, maybe it's lower forever now, because it's probably going to be cheap until we start to see the demise of the hydrocarbon age, maybe from 2025 to 2040. So I don't think we'll see $100 a barrel again in my lifetime.
OPEC's obviously trying to battle this. They want to see prices higher. Do they have anything left to fight this? I mean, is this just inevitable? Everything they're doing is just going to fall flat?
Yeah, there's not much. I mean, actually, the low prices are helping them because global demand is rising by about 1.4 million barrels a day. But even that's a little bit paltry considering the circumstances. So the only thing they have going for them is privately. It's kind of like refiners hope some other refiner has a hurricane so they can benefit from it. OPEC countries maybe hope that one of the other countries, Libya, Nigeria, has some sort of internal disruptions that knock down production. So, you know, I think the price around $50, 45 to 55 is probably the reasonable range, but we can have moments where we go into the 30s. We could have a moment where we go into 65 or something like that, but not months, just moments.
Tom, you know, it looks like Venezuela is slipping into anarchy right now. Do you see there's a chance that oil production there falls off the cliff?
I don't know if it falls off the cliff. They'll have to be like Libya if they do fall into just complete disarray. And I'm not sure they're like disarray 2.1 right now. The problem with Venezuela is we get a lot of heavy crude from there, and the world relies on heavy crude. Maybe you think about it metaphorically as a high-protein crude that you need with the carbohydrate crude.
Waxy.
Yeah. And now, if something happens in Venezuela where they get some sort of administration that's closer to democracy and closer to the West, they have the largest oil reserves in the world.
Huge opportunity.
Yeah. I mean, just a tremendous opportunity, and no one out there is thinking that within the next 5 or 10 years that they'll get the Western companies back and exploit the reserves.
How does that situation in Venezuela affect gasoline prices here in the U.S. with that Venezuelan crude that might be refined here in the United States? Can these refineries that are engineered for that, it's heavy sour, isn't it? That heavy sour, can they shift to crude that's produced here in the United States easily?
They can always run light and sweet. Now, the problem with light and sweet, I defer to the ladies here today. The problem with light and sweet is that you make a lot of gasoline and a lot of light ends from it. So you actually have more gasoline when you're running the light, tight shale oil than you would if you're running Venezuelan crude or some of the heavy Iraqi or offshore crudes.
So does that push gas prices down
even further? Conceivably, it pushes gas prices down during, after the season. I mean, we're in the last 2 weeks of driving season right now. Gas prices are going to go down after Labor Day. It's just a question of whether they do it in slow motion or whether they do it in kind of pell-mell fashion.
Just from a demand perspective.
Absolutely. Demand drops by about 5 or 6% after Labor Day. And, maybe more now because, the Amazon factor and people not going to malls and so forth. I don't think that's just a figment. I think it's real. Yeah. And that means a lot less discretionary traffic on the road.
All right, we'll leave it there. Tom, great to have your analysis.
Nice to be here.
Thanks so much. Tom Kloza joining us there.